With an impending rate announcement on June 5th, many Canadians are wondering, is the Bank of Canada going to lower rates, and what is going to happen to the housing market if they do or don't? In this video, we are going to discuss the sentiment out there from a homeowner's perspective. We're going to talk high level about the real estate market. We're going to talk about the federal budget, little bit about capital gains, as well as housing starts, because if they're not building houses, what situation are we going to be in a couple years? If you're new to this channel, welcome. My name is Justin Konikow, one of the owners of Prime Real Estate with my incredibly intelligent wife. She's the brains of the organization. I like to call myself the feet, maybe in this video, the face. On this channel, we give you boots on the ground knowledge of what's actually happening, and I don't need to sell you anything. I just want you to be educated and empowered. We also build an actual community. So Prime has its hands in all aspects of real estate, which is very unique, but we also throw community events. In about 30 minutes, we have a mastermind at Prime headquarters where we're bringing in consumers just like you, past clients, investors, builders, and developers, and we are not pitching and not selling anything. We are just creating a community of people and collaborating. So if you're interested in those types of events, just comment mastermind below and we will put you on the secret event invite list. We also have amazing partners all over the country and all over North America. So if you're looking for an agent anywhere on the planet, just connect with us below or in the comments and we'll connect you with one of our Prime partners. According to a recent BMO survey, it seems that most aspiring homeowners are waiting the rate cuts to actually enter the marketplace. The majority of Canadians aspiring to buy homes say they will push plans till next year or later, waiting for rates to drop. BMO said 72% of respondents says they're hoping to buy a home and will wait until borrowing costs fall, an increase of 4% compared to the same time last year. While interest rate cuts are expected in the second half of this year, senior economist Roger Quebec says it is still a long way from rate cuts to be low enough to restore affordability to recent norms. I can tell you that that data translates to what we are seeing in the marketplace. Last year on the same channel, we said about 65% of buyers were waiting on the sidelines, and you can see that that number's actually increased. What's crazy is, and this is something that I'm pulling you behind the scenes to see, is we're still seeing multiple offers. One of my agents was in a file 2 days ago that had 20 offers. Last week, we were in 10 competing offer situations. But where is this happening, Justin? Think about it this way. The resale market compared to the new dev market compared to the maybe new build resale market are three different animals, and I'll break them down for you. The resale market at the lower price point is ripping because that's where the affordability is. And when I'm talking entry-level price points, I am talking $200,000 to $600,000. And what you're seeing is homes that should sell for $600,000 being priced at $499,000, entering into multiple offer situations to get to that price point. People are going in firm, no conditions, and I would warn you that light switch can go off tomorrow. So if you have a house to sell, make sure that house is sold before you go and spend that money. If you're a seller in multiple offers, may feel great getting a firm offer, but are you sure that that person is gonna close? Are they actually a cash buyer, or do they have to sell a house in order to pay you on closing? Because if they don't, you may be in a very different situation down the road. Then if you get to the mid-tier price point in our market, which would be your 600 to say 900, maybe cusping to about 1.2 million, you're seeing activity depending on the area. So be very careful about making the same assumptions that the market is down in all places. If you're well priced in a great neighborhood that has a lot of buyers looking to get into it, good school zones, an area that's experienced a lot of growth, may be more competitive than going a little bit further out or finding a rural property without as much competition. Now, when you get to 1.2 to say 2.3, 2.4 million, a lot more activities happen at that price point that we saw previously. The luxury market in our territory wasn't experiencing the same fervor as these two first price points I explained to you, but recently we saw a big uptick in activity and people looking for the next 10 or 20 year plan. The ultra luxury market, again, a very different type of buyer. Those buyers are not as rate sensitive, but they are deal sensitive. So if you're a seller in any of those markets, be it low, mid, tier, high, or ultra luxury, make sure you have the right strategy and you understand the marketplace you're coming into. I can tell you that having an ultra sharp price point is so important. If you are priced even 10 or 20% over thinking, oh, they'll just give me an offer, it's not happening these days. You have to be in great condition, priced very competitively to even get a showing, let alone an offer. On the buy side, what does that mean? Make sure you know the situation you're going into and you have a strategy before you get emotional in the multiple offer situation. If you're looking to purchase, there's great inventory out there. The problem is a lot of buyers are fighting over something that was listed a week ago with a sharp price point and overlooking great opportunities. There's stuff that's been on the market for 3 or 4 months that I know is the perfect property for the right person, but people are funny. They don't want to buy something that's been on the market for 3 months because they think somebody died in the basement. There's something wrong with it. There are deals out there if you have the right strategy. Zoom out and take a 30,000 foot view as what you're trying to accomplish, and then zoom in and try and find the opportunities. I'll touch on the commercial sector quickly because I think it does matter, especially to Southwestern Ontario, but if businesses are opening up, what does that mean for our country as a whole? We've noticed businesses tightening their belts, shrinking their staffing sizes, but we also notice a lot of institutional development coming down to Southwestern Ontario. I think looking for infrastructure for the next 10 to 20 years is what they're doing. A lot of stuff happening in St. Thomas, Elgin County, but even further down the highway. From a land development and new build perspective, deals are still happening despite what you hear out there. You just have to work a lot harder to make them happen. Creative deal making is happening in the new development sector. I'm gonna touch in a couple minutes on housing starts. And I think there's an opportunity zone for you to get into a new house over the next year or two. But the problem with the housing start issue is once that window closes, I think new home ownership is going to be a luxury at best. Lastly, in the agricultural space, we are seeing a lot of interest in Southwestern Ontario, Canada. We're seeing large institutional farmers buying up hundreds and thousands of acres. We're seeing people that want to buy hobby farms, pick up 50-acre hobby farms with outbuildings that maybe need renovations, get excited about the rural and farm lifestyle. We're also seeing family operations maybe look at exiting the farming industry, either selling to a larger operation or looking to just cash out because maybe the kids don't actively want to farm going into the next generation because of taxation, the amount of work, lifestyle. We did an entire mastermind around this topic. You can actually go to my YouTube channel if you'd like to see that video, or just drop it in the comment and say Farm Podcast. I will get you the link. It's getting lively in here actually. If you hear a little bit of noise, that's because we've got about 30 people coming in to do a mastermind on new home development. If you want invites to our private masterminds, just comment the word mastermind below. I'll make sure you get the link for that. So the federal government made an announcement in their recent budget where they said they're going to implement a Canadian Renters Bill of Rights, and they're going to require landlords to disclose their properties and rental price history to prospective tenants. This is one of the 3 new measures that will be part of an upcoming federal budget, which will include new housing aid fund and push to have rental payments affect credit score. They're looking to amend the Canadian Mortgage Charter and call on banks and credit companies to incorporate rental payments into credit history, making it easier to qualify for a mortgage. Also, rental demand outpacing supply in most major markets are putting pressure on the rental space. The average 2-bedroom purpose-built rental apartment went for about $1,359 last month. Keep in mind that is a national statistic. Go into major markets, it's a lot more than that, and condos sat at around $2,049. This was back in January. The overall vacancy rate, 1.5% last year, which was a new low, and rates have declined while rental costs surged. Trudeau has promised a $15 million fund for providing legal aid services to protect tenant rights against unfairly rising rent payments, rent evictions, and bad landlords. Fun fact, rent evictions are actually currently illegal. If a landlord tells you you have to leave because they're moving in, they renovate it and put it back on the market, you can actually take them to court because they have broken the RTA. As well, in most cases, you can find out exactly what units are renting for in buildings. If you're working with a real estate agent, they can pull that information for you, and there's many sites that you can go to that have third-party data out there as well. My opinion as a whole is yes, I believe in regulations and making a safe and fair marketplace to get rid of bad actors. I'm concerned that spending another $15 million on another program or regulatory capture is actually going to hurt us in the end. I think what you need to do is actually get the tenants, the landlords, the real estate agents, the people that are in political power together and come up with an idea that's going to check the boxes for all 4 groups. There's too much in terms of identity politics and people blaming each other and not providing tangent solutions that actually leads to a transparent and fair marketplace. Now let's talk housing starts. The Canadian Mortgage and Housing Corporation said the annual pace of housing starts in March declined 7% compared with February. The national housing agencies that seasonally adjusted rates of housing starts amounted to 242,195 units in March compared to 216,47 in February. Now looking at year-over-year figures, actual housing starts in large urban centers up 16% with 17,000 units last month compared to 14,000 in March 2023. Year-over-year increase was driven by higher multi-unit startups, about 19%, and higher single detached starts, which was only up about 2%. The annual rate of rural starts around 21,452 units. Housing starts continue to trend at a solid pace even with a decline in March, supported by elevated prices and firm pre-construction sales in the past. Further decreases to the number of starts are likely in the months to come. Challenges such as construction labor shortages, inflation in building material costs, and weaker home builder sentiment could potentially slow momentum. This goes back to what I said earlier in this video as an opportunity zone. I think a lot of buyers have had their buying power slashed with the current political and economic climate. And I think builders, seeing the writing on the wall, pulled some projects offline and are happy to plug through the inventory that they have right now and get creative on deal making. The problem that I foresee is, let's just say you took 30 to 40% of new build projects offline, right? They were building and selling 100 homes a month and they're down to 2 to 3. What does that mean from a timeline perspective in terms of getting the machine back up? If they did drop rates in June all of a sudden and those 70% of buyers came back to the marketplace and they all wanted to buy a new home, the number of homes available to them would shrink very quickly. The available inventory would drop off a cliff, and to build a new home, you're easily 6 to 8 months. Not to mention if you're talking about servicing raw land and building an entire subdivision. And we all know that we're in a housing crisis, and one of the most important things we need to do is bring in housing. We need to increase density, we need to create flexible zoning, we need to create efficiency in the planning and approval process. We need good builders building good homes at affordable price points, but that is not going to happen unless we get that machine going. It's going to be too much of a lag between when they drop rates and consumers entering the marketplace and builders bringing the product to market that we may be exactly where we were in 2020 in terms of competition for new homes. And that is not a place anybody wants to be. The most successful people I know experience fear. The difference between them is they acknowledge it and they act in spite of it, where people that don't find success are typically paralyzed by it and make decisions because of the fear. So what does this mean for you? So many moving parts and so many different markets. I think high level, it means that yes, you want to pay attention to the macro. Of course, you're probably going to watch the BOC's update on June 5th, and you're going to be talking with your power team, which is your lender, your lawyers, your real estate agents, and you're going to plan and not get emotional and make decisions very quickly. But I think at the same time, you're not going to get paralyzed in the micro. Understand what's happening from a macro perspective. I think people have tightened their belts. They've found a way to do more with less. And I think that if you are in the real estate space looking to buy, sell, invest, get a health checkup on your own current property, you're not in a bad headspace to do so, and be okay to be opportunity driven. Does it mean you have to buy and sell and flip real estate every day and do what got us here in the first place, which is day trading real estate? No. But it does mean that if you're looking for a shift in lifestyle, that there are opportunities out there. And what's happening right now is something that has happened in the entire history of time. And eventually, they are going to have to stop kicking the can down the road. They're going to have to lower rates, and they're going to be in a position where we're not going to have as many houses as we need. So get out there, let your opinions be heard. I'd love to hear you in the comments. Are you in the market for a new home? Would you even consider building right now? Would you like to come to our private masterminds to talk about stuff like this? And did you get any value from the video? On this channel, we give you boots on the ground information as to what's happening on a regular basis, market updates, we give you evergreen videos, opinions on what's in the news, as well as off-market deals and so much more. Make sure you hit subscribe, connect with us below if you're looking for an agent here locally in any asset class or anywhere on the planet. Appreciate you being here, and welcome to the Prime Nation.